Hello folks, this is Don Cloud from Cloud Investments with an educational economic update for February 2018. In this month's video, we'll discuss some of the major headlines that influenced markets in January. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of the video for a required disclosure statement. January 2018 is behind us, and stocks posted quite a positive start to the year. In fact, even anticipation for the first federal government shutdown since 2013 didn't derail markets. The S&P and Dow both had their best month performance since March 2016, with each rising over 5%. The Nasdaq gained 7.3%, making January its best month since October 2015. Several details that came out during the month indicated that strengthening economy is driving market performance. Initial readings of the gross domestic product, or GDP, showed the economy grew by 2.6% in the fourth quarter. That's smaller than projected. The increase still implies healthy economic growth. Corporate earnings data also suggests that the economy continues to expand. During January, many companies released their earnings reports for the fourth quarter of 2017. And by the end of the month, 81% of the S&P 500 companies that had shared their earnings data beat expectations. And that's 83% exceeded their revenue estimates. In addition to growing corporate earnings, labor measures seem to illustrate that the economy is advancing. The ADP employment report indicated that private companies added more jobs in January than analysts expected. Further, fewer people filed for unemployment in late January, keeping the initial claims close to a 45-year low. Unemployment currently sits at 4.1%. and could go as low as 3.5% by the end of the year. And wages are finally starting to pick up too. According to the Labor Department, the Employment Cost Index, or ECI, in the fourth quarter was 2.6% higher than a year before. This increase is the largest since early 2015. Examined together, you see a growing market, increasing corporate profits, low unemployment, and rising wages. But this positive news is not without risk. If the tight labor market leads to further wage growth, inflation could increase. At that point, the Federal Reserve could start raising interest rates more quickly than anticipated. The Fed met at the end of January and decided to keep interest rates at the same for now. They did indicate, however, that they expect inflation to increase over the next year. After years of inflation missing the Fed's 2% benchmark, the markets would have to decide how to react to prices increasing more rapidly. Ultimately, we have strong growth in corporate earnings on one side and the potential for faster than anticipated interest rate increases on the other side. Looking ahead, we will continue to analyze the interplay between economic growth and inflation. Only time and data will tell exactly how these connected pieces will come together. But we will work to keep you informed along the way. Well, that's it for this month's Educational Economic Update. Here are some upcoming events we'd like for you to know about. Retirement Planning Today at Drake State Community and Technical College on Thursday, March the 1st and 8th, and Tuesday, March the 6th and 13th. This will be held at 6 o'clock p.m. Retirement Outlook for 2018 at Rock House Eatery in Guntersville. This will be held March 6th at 11:30 for lunch and 6 p.m. for dinner. Once again, this is Don Cloud from Cloud Investments signing off for the month of February 2018. Please remember that nothing we talked about here is a recommendation. If you'd like more information to discuss your personal financial situation, please give us a call at 256-715-0094. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Advisory services are offered by Cloud Investments, LLC, a registered investment advisor in the state of Alabama. Insurance products and services are offered through Cloud Financial Incorporated. Cloud Investments, LLC and Cloud Financial Incorporated are affiliated companies. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.